Good morning and welcome to the Atlantic Council live from the IMF World Bank meetings in Marrakesh. We are here on Friday, plenary day at the IMF World Bank meetings. We are just 30 minutes away from the IMF Managing Director and the World Bank President, as well as Ukraine's Finance Minister, who will chair the plenary, giving key speeches at this critical day. And we start the day with an issue that has dominated conversation here during the meetings: digital trust, digital public infrastructure. Our event this morning, Public Trust in Digital Infrastructure. I'm joined by fantastic panelists: Nicole Golden, Senior Fellow at the Geoeconomic Center, Global Head, Inclusive Economic Growth, Apt Associates; Jesse McWater, Senior Vice President, Regulatory Affairs, Advocacy, MasterCard. Jesse, Nicole, thank you for joining me. It's a busy day here in Marrakesh.
It is.
I think this is the right topic to start with, because everything we always do at the Atlantic Council, as you both know, is try to go a level deeper from the conversation that's happening. And as always at the IMF meetings, and these are no different, IMF World Bank meetings, and these are no different, we're talking digital inclusion, financial technology, how these tools can help leverage development, help macroeconomics within a country, help stability, but it's a little more complicated than that. And that's what we wanted to dive into together, some of the complexities and nuances when we say words like fintech and inclusion and digital financial inclusion. So that's what we're going to do over the next 30 minutes together.
Great.
Nicole, I want to start with you. What are the gaps that you see? Because we talk about it at this level. This can deliver growth. This can generate growth. This can bring more people in the financial system. But which people? Which sectors of society? Not everyone benefits equally from these technologies.
Absolutely, and you started by breaking down really well that it's the financial inclusion piece, it's the digital piece, and it's the trust piece and the growth piece across all of those areas. And you're right, Josh. It is not. We've got gaps on all around, right? So let's start with the financial inclusion piece. Let's start with that. We've got 1.4 billion adults that are still unbanked. That was as of the 2021, the flagship World Bank study. So that's a lot of people. Now the good news is that number is half of what it was in 2011, and a lot of that is due, in fact, to digital diffusion and the adoption of fintech and other digital financial services. But within that, again, there's a digital divide, right? And so that's creating a double gap that I know Jesse's going to talk to a little bit more. Within that financial inclusion gap, you still have a gender gap of about 6 percentage points. Again, coming down, but that's still pretty significant, and it's wider in the developing economies than in the more advanced economies. Similarly, we have young people that are still facing about an 11 percentage point gap just in terms of the financial inclusion. Again, there's digital gaps, but that's also both helping and hurting the situation. And the last thing I want to sort of bring up, because I think it's going to be part of this conversation as we get into it, is what we are seeing is, again, these digital payments that are really increasing, that are becoming an increasingly interesting part of the story that I hope we'll have a chance to come back to. Global revenue from digital payments was estimated to be at 10 trillion this year, and that's expected to grow to 15 trillion in 2027. However, right now we're at about 50% in the developing world and about 90% or even 95% in the advanced economies. So again, showing that gap, but a lot of promise and potential that hopefully we'll have a chance to come back to.
Well, thank you, Nicole. Digital payments is a good way to turn to Jesse. So Jesse, you're from MasterCard. Digital payments part of your business and globally what we do. We haven't actually heard enough this week from the private sector. Had a lot of finance ministers, a lot of central bank governors. There's a lot of private sector representation at these meetings, as there should be. And I want to talk about another kind of gap, and Nicole outlined a few of them, but public sector versus private sector gap. Because when we talk about fintech, when we talk about these technologies, most of the time they're not built by the public sector and they are not delivered by the public sector, but it's the public sector that is actually leading a lot of the conversation, at least publicly. Yeah. Your view on this?
So, I mean, I think at MasterCard we have a long history of being extraordinarily passionate about financial inclusion. Our former CEO, who is now
we'll hear from him in a few minutes.
His first one in his new role at the World Bank, set a really ambitious goal of including 500 million people into the formal financial system, and having achieved that, we've doubled down on that commitment and brought it up to 1 billion. Yeah. And so this is something that for a long time we've been thinking about. But I think that what we've really learned in the course of that process is that it's an inherently collaborative effect. It needs to be a collaboration across the private sector, and it needs to be a collaboration between public and private sector, with both bringing complementarities together. And I think to sort of focus on some of the things that Nicole said, financial services, payments, these aren't systems that can stand alone. They're fundamentally interlinked with other forms of infrastructure and capabilities that are really important. You talked about the digital gap. Almost 3 billion people in the world today don't have access to internet. Without access to internet, it's pretty difficult to get access to digital payments in a trusted and consistent way. People don't necessarily have the training that they need in order to understand how these systems work. It's one thing to give somebody an account. It's another one to make them feel that they can use that account in a trusted way. And what we've seen in a number of different pilots is that you can drive to account access, but not necessarily see adoption. And that's because all of this has to kind of fit together. And then I think the last thing that I'll say is that setting up any type of infrastructure, but in particular, payments infrastructure isn't a one-time investment. Payments can be, unfortunately, a vector for fraud. Fraud can deeply undermine trust within financial systems. And so you need to stay ahead of the fraudsters. And staying ahead of the fraudsters requires a model that enables continuous investment. It's something that we're extraordinarily focused on within our payment systems, but we think that indeed all payment systems need to find ways of appropriately focusing on it, because if the trust of one payment system comes into doubt, that undermines the trust in digital payments overall. And so it's a continuous battle to keep these systems secure and trusted.
That's such a key point, because in our research at the Council, we find so often that how people feel about CBDCs or stablecoins or crypto, and I'm just talking about that type of payment, one subset of broader payment systems, influences how they feel about others, because it is about how they feel about a digital financial ecosystem. And we often think about it very segregated, but people don't actually approach it this way. And so I take the point. I want to ask you one follow-up on data, because we spend a lot of time at the Council. I know Nicole does this research, my colleague Ananya Kumar does this research, trying to actually prove some of the statements that are made out there about financial inclusion and digital opportunities to enhance financial inclusion. MasterCard has a lot of access to this data. You're not the only ones, but you have some of the best data in the world. I just wonder how you think about, putting some meat behind the bones of the claims that are made out there, and how, we as researchers and others can basically prove or disprove some of the claims about how these tools can enhance financial inclusion.
So I think that researching and actually understanding what's happening under the hood is absolutely essential. It's easy to say, as I said before, that you've onboarded people into a system, but are they using that system? Is it changing the way in which they transact? We have a long-standing partnership with a number of different NGOs and civil society organizations around wage digitization. And what we've learned throughout that process is that wage digitization, we think, incredibly important. We think it has the potential to increase digital adoption of payments. It has the opportunity to give people more control over their salary and over their spending. But the success rate of these sort of efforts is not homogeneous, right? And so what we see is that in some instances, when you go back 2 years later, you'll find that the sort of people are withdrawing almost 100% of their funds from the system. You find that in some instances, even where we've seen programs that focus on, for example, female garment workers, wage digitization, that there's often a story that says that this gives women more control over their funds. But again, that's not consistent across pilots and programs. And what we've found over and over again is that that assessment of the data and the training of individuals in response to that data is really critical. And so in Bangladesh, for example, where one of the pilots that we ran really focused on doing education on the benefits of joint decision-making within households between husbands and wives around how money got spent, we saw significantly better outcomes in terms of female empowerment. And so I think ultimately it's about learning from the data, it's about collaborating with researchers, something we do a lot with our Center for Inclusive Growth, and really trying to figure out ways to refine and iterate and make these programs stronger.
That's a big thing I'm always thinking of, is just the claim comes out, a lot of claims here at the IMF World Bank meetings, show me the data. I just really believe in that. Nicole, I want to pick up on some things Jesse said on financial literacy. We were talking about this before. these tools do not solve problems that are not fixed at a more fundamental level in society. How do you see that gap?
Absolutely, and just picking up quickly on that, as well as something Jesse said about this data, the importance of data, and I think they're just going back to the overall framing around trust, is that we know data is a really key aspect of transparency, both, as you said, in the individual level, but also at the community and at the society and even the government level, and back to that public-private interaction. So the data piece and the current data gaps, I do think is a really important thread to just pull on that much more in the context of data, transparency, building public trust, the overall theme. But it also relates back to your question about the skills and the sort of underlying ability to use the tools. We talk about it from a digital skills perspective, but if we're thinking about financial inclusion, I think we're often overlooked the financial literacy aspect of the equation, and the fact that if somebody can't balance a sort of checkbook, so to speak, then you can give them a digital tool, and they still might not be able to balance that checkbook, but they might not actually, from a digital skills be able to use the tool. So it's really that kind of combination on all levels. And just to pick up on one other thing, as it relates to that, is this idea of what we saw. Digital COVID really helped drive of course, digitization and the use of digital payments. And there is some data around, and I'm glad you brought up how important this is for women in particular in a lot of households and communities. There is some data around the impact that receiving a digital payment of any kind, a remittance, which we know is a huge number of people, a wage payment or a government transfer, does translate into more people using financial services for savings or for borrowing. And there was a really interesting study done by our friends at the IMF looking at the impact of digital financial tools for women entrepreneurs in particular, because again, that access to finance and fintech. A study in over 100 countries found that adoption of digital financial services and digital tools and among women entrepreneurs increased not only the number and ratio of female employees, but also their returns, and it mitigated some of the returns on women entrepreneurs. So
that's a great
it's
stat.
a really important part of the story.
And if I can just jump in on this discussion of data, because I think when we think about data, when we think about being able to learn from it, there's a flip side to that I think is really essential to trust, and that's about privacy and data protection. People need to know that their private information is being protected. They need to have transparency into the ways that it's being used, and they need to know that their privacy is secure. And so that's one of the reasons when we think about approaching the design of our core and a variety of other systems that we're working on, it's the principles of privacy as design being really important. Making sure that no one within the system is sort of responsible for holding or collecting information that they don't need in order to perform their activities. And this has the benefit, both of allowing us to sort of implement strong privacy protections, but also ensuring that there isn't a collective honeypot. There's not one single place where all of the data is sitting. Instead, it's fragmented around the pieces of data that people need in order to perform their functions within the payment system.
And you're talking about from a cybersecurity perspective.
Absolutely. So it helps keep things private, but it also helps protect people from hacks and data breaches, which can be so damaging.
But let me give you the counter that I hear a lot and on the payment systems is, and India's a good example of this with UPI, that basically you need public investment to start and catalyze this, because the fragmentation within the private sector will not lead to core new infrastructure being built. And so while there are huge risks in terms of centralization and honeypot and privacy, as you raise, without some sort of public signal, public catalyst, public investment, you actually won't leapfrog. Every country has a different approach to this.
Well, and I think that the important thing here is thinking about the enabling, the coordinating, and the catalyzing role that governments can play. We see, for example, in the case of India, that a massive, focused, and incredibly ambitious investment in identity was a foundational enabler. And I think if you look at systems that have experienced really rapid uptake, it's often been grounded in some form of digital identity, whether that's been a sort of a foundational government program like Adahar, or simply a system of sort of mobile phone numbers, combined with a KYC system that allows you to use mobile phones to onboard people. That's really what's been critical to enabling. And so I think the government can play a catalyzing role. The government can find ways of solving market failures and of driving coordination in the private sector, but that's not necessarily the same as the government stepping in and directly providing those services.
Fair enough.
Or competing with the private sector in ways that could actually, I think, distort or limit innovation.
Yeah. So, Raj, I want to bring you in. Raj Kumar's joined us, President and Editor-in-Chief of DevX. Raj, good morning. Welcome to the IMF World Bank meetings. No, we're honored to have you. So you get thrown right into the fire here, Raj.
I'm happy to. That's what this annual meeting is all about.
I'm going to ask you to respond to something we've been talking about, which is, really thinking about these digital ecosystems. How much can they actually solve? Because one thing I hear a lot at these meetings, you've been part of these before, is that it almost gets thrown out as a silver bullet a little. Oh, digital technology, financial inclusion, and our topic and our thesis here today is it's a little more complicated than that.
I guess I'll be controversial and say it's the closest thing we have to a silver bullet.
Okay.
There is no silver bullet in life, but if we look at the broader macro environment, funding for all the issues we're here to talk about, health or education or agriculture, it's going down.
Yeah.
Institutions like the World Bank are at the center of the action now, in part because they're already funded. They don't require additional bilateral aid immediately. And Ajay Bang is saying, he wants to get bigger eventually, but he knows right now we just got to get better.
Yeah.
And when you think about that better part, how does an institution like this actually take their existing resources and stretch them further? Kind of the only answer is digital. It's not just digital financial inclusion, but it's across the board. How do you do more with less? And I think digital is going to be at the center of those conversations, and that's in every sector within global development. Financial inclusion is a great example of a cross-cutting one, because you can fund people directly, hospitals and clinics directly, farmers directly, in a way that you really couldn't have done a decade ago. That opens up enormous possibility, and it creates more of a competitive environment.
Yes.
Right? So suddenly you have this idea of cash benchmarking, where you can say, all right, I've got this great idea for a health education program. How does it do compared to just giving money to people?
Yeah.
And that's a
good
powerful competitive force.
One thing that interests me a lot in this area is how much innovation is not happening in the West. These are Western-dominated institutions, the IMF and the World Bank. They talk a lot about these issues. They're trying to invest more in these issues. But the best innovations are not happening there. They're happening in emerging markets and developing economies. And I wonder about that transmission mechanism of the technological advancement in those countries and then being able to come back into the West where they can learn from what's happening there.
Yeah, I remember maybe it was 15 years ago going to our office in the Philippines and seeing all my colleagues there, doing something on their little feature phones back then, and they were sharing money.
15 years ago.
M-Pesa.
M-Pesa in Kenya is now in like 98% of households.
Exactly,
So, I think necessity is the mother of invention. In low resource environments, you find the best tools. The best tools are going to be digital, and the most efficient ways to move money around and to transact business. So I think it's natural it starts there. In some ways, in the more advanced economies, you've got more incumbents. You've got industries that are highly regulated, slower moving. And so it's going to come, a lot of it, from the global south. But this is like gravity. This is coming.
It's coming.
So it's more a question, how do you shape it? Not, whether you're going to slow it down or not, or stop it. But how do you shape it to actually have the inclusive results we want to see, where you're using the benefits of these new technological advancements.
So Jesse, let me come back to you then on the risk side. You touched on this before, illicit finance, we talked about cybercrime a little bit, AML, CFT. Obviously there, the public sector has to be deeply involved in collaboration with the private sector. Do you see these tools as they're being developed? There's capability to do this better than it's currently done, but there's also capability to have it done worse if not implemented correctly.
And I think as I alluded to earlier, fraud is an incredible concern. And what we see in economies as we look at them is that when a new system of payment gets rolled out, new types of fraud emerge around that, and that fraud is often cross-border, cross-cutting, and can be incredibly sophisticated in nature. In advanced economies where we've sort of recently seen the adoption of peer-to-peer push payments, we've seen incredibly sophisticated authorized push payment fraud systems evolve around that have been present for some time in emerging market ecosystems. For example, in the United States these days, you have people effectively cloning the voices using AI of your loved ones, who will then make a call to you and say, oh, you know, I need money because I've been arrested or some other sorts of problem. Incredibly sophisticated. And so we need to think about the structures that we put in place to defend against that. That means educating people, but it also means investing in sophisticated capabilities that are able to detect and protect this fraud. And finally, it means creating commercial structures around payments that allow you to provide a safety net that says that even when a person has sort of made a mistake, even when the fraud systems haven't been able to catch some new type of fraud, that individuals are appropriately protected. And I think that is perhaps most important in emerging markets where sort of, you know, one instance of fraud can potentially be devastating to an individual or to a family. And so I think really thinking about how you build a full stack set of solution to fraud structured around education, technology, and ongoing investment, absolutely critical.
And just to pick up on that, going back to something we talked about earlier on that digital skill side, I mean, one thing that, to that point, is that the online safety, right, it really does it comes down to the individual level, and that we're seeing increasingly that online safety, I mean, we see it in our workplaces too, right? I mean, I think we've probably all had our security, online fraud training, but bringing that into, and that's some of the things, for example, when I was working with the bank on some of their digital skills programs in the Middle East, the safety part is a big part of that, and just, you know, to that point, it's really critical.
But let's talk about the World Bank and the IMF a little bit, their role in this, and your perspective having come from the bank, and I appreciate you earlier citing IMF data. I know that took a lot, so thank you for that. But, you know, what can they do? Because when I was at the fund, when you were at the bank, they talk about it a lot. They talk about capacity development. They have people on the ground helping with this. But it's not, at least from the fund's perspective, what I would say, you know, part of core surveillance, to use fund talk, right? So it's separated from the sort of capacity development function, and not to get too in the weeds of the fund, but the capacity development function of the fund versus the core surveillance function of the fund. But your perspective from the bank side.
And it's going to pick up on what Raj was saying is it's about using the resources they have and integrating it into not only the kind of advisory programs and helping, whether it's working with governments to create more incentives to bring in the private sector to sort of invest at the sort of macro level, at the infrastructure level, as well as bringing it through the programs. Again, the example I mentioned, the Skilling Up Maastricht program in the Middle East, around integrating financial literacy, digital literacy, and safety into whether it's an education lending program. So I think it's those aspects. And then the other piece, again, on the data, the World Bank and the IMF are good at, you know, collecting the data. So I think it's leveraging that. And it's, again, about, to Raj's point, being the lab for innovation. The World Bank's got a lot of innovation labs in the gender innovation lab, right, in the digital space. So it's about being also a kind of hub to bring these different sectors together. I also, you know, the bank is doing some really interesting research on the GovTech, right? On all the different techs, and on the GovTech in particular, I think they've been out front in that space and helping drive a lot of that agenda. And from a public trust perspective, GovTech and digital services are going to be really important in helping transparency and service delivery, which again helps build the public trust. So those are just a few of the ideas.
So Raj, let me come back to you because I've been thinking about this a lot. The next IMF World Bank meetings that won't be in DC will be in Thailand, a country that's doing a lot on these issues actually. And I wonder where you think we'll be in 3 years from now, because I'm sort of the belief that progress is not inevitable and it requires a lot of thought, coordination between the public and private sector. We have this sort of self-fulfilling, things will be better 3 years from now on these financial inclusion issues. How do you see this?
I think it varies a lot by country. You know, as you bring up the case of Thailand, I think there are countries that are advancing very quickly on digital identification, which is one of those backbone infrastructure investments you need. I think, again, back to the necessity is the mother of invention, I think a lot of governments, in addition to institutions like the World Bank and the IMF, will see this as the place they have to focus. Certainly Ajay Banga is very focused on digital.
I hear this this
comes
from him in a few minutes.
As Jesse knows well, he comes from the world of financial
Yeah.
inclusion, but I think more broadly, if you think about, for example, the bank's role on climate, and how is it actually going to drive a climate agenda in a lot of its borrower countries? Digital is going to be the way in for a lot of this, because you need data, you need to know what's actually happening, you need to be able to incentivize various behaviors, including through tax incentives and credit. That doesn't work unless you can get involved in every financial transaction in a way, right, in the country. And so I think the bank is working a lot on this idea of greening digital, but then the other side using digital to drive a green transition. So my hope is some of those needs, just the realities of what's required around the world, are going to get us to make some real progress in the space, but it will be a mixed bag. It will depend a lot on government policy, which is the place the bank and the fund can have the most impact. You know, working with governments to establish the kind of best practices for the rules for the road. You know, we talk about fraud. If you know, fraud's going to happen. If you have the right competitive environment, companies that are not very good at it should lose.
There you go. There you go.
Ultimately, the consumer should be protected no matter what.
Right.
But you need some environment in which innovation actually wins out, results win out, and we've talked about that a lot in the global development space. But I just think now there's really no alternative.
The data drives transparency as well as competition.
That's right, and I'm glad you brought up climate, because I think that we get lost sometimes in the tools themselves, what's being delivered, and forgetting how this fits into the broader mission of the fund and the bank. And if we can talk about it more like that and how they can help deliver on that mission, then it becoms more part of the core, which I've been trying to push at, and not segregate it out to another part of the fund and the bank's work.
And even the way we think of like the term infrastructure, which think about roads and bridges. I think 3 years from now we might say infrastructure and actually start thinking about digital infrastructure first.
And there are countries that do that already, to your point, but not so much in the West yet.
That's right.
Okay, Jesse, if we have about 2 minutes left, I know the plenary is about to start, but just want to give everyone a final round.
Yeah, and I think that this discussion of infrastructure is, I think, really important, and we know firsthand the incredible and transformative effect that delivering payment infrastructure into an ecosystem can have on financial inclusion and on commercial efficiency and effectiveness. But I think that there's always sort of a caution that comes with that. And for me, I think that implementing a new payment system is a little bit like getting a pet. The actual setting up of the system, that's the easy part. Training people in terms of how to use it, ongoing care and maintenance for the system, investment in keeping it safe and healthy. These are actually much more substantial than the initial setup cost. And so when we take a step back and we think about the future that we're trying to build, we think about where we want to be in 3 years, it can't be just a single point on a roadmap that says we've implemented this important new piece of infrastructure. It has to be the ongoing care and the maintenance of that infrastructure. And for us, we think that that's driven by a competitive environment that encourages ongoing innovation, that encourages a diversity of different service providers, that all of that is really foundational to having a digital payment infrastructure that is healthy and supportive of the goals of financial inclusion and digital trust on an ongoing basis.
Thank you for that pet analogy. I'm going to try to use that throughout the week here, at least the weekend. Nicole, I'll give you the final word.
Oh my goodness. Well, I think Fritz the dog is now awake and listening with even more interest. And just wrap up by saying that what it all comes down to when we're talking about inclusion, it is going to be about meeting people where they are. To Raja's point, people are in different places, they're in different ways. It's meeting them in the schools, it's meeting them in the workplace, it's meeting them, on the street sometimes, right? And so I think it's going to be about everybody coming together, meeting people where they are, and hopefully we'll see some progress.
Good. Well, that's the point. That's why we're here, try to make some progress and talk about these issues at a level deeper than they're typically talked about. Raj, Jesse, Nicole, thank you for joining us this morning. Hope everyone can make it into the plenary session and hear from Kristalina and Ajay and all the distinguished speakers, because this is sort of the key moment of the meetings coming up. We hope everyone watching stays with us throughout the day. We have a series of finance ministers to bring you from Turkey, from India, from the European Commission, the Executive Vice President. Stay with us throughout the day here at the Atlantic Council live from the IMF World Bank meetings in Marrakesh.